Welcome to the Market Moment. My name is Lee Mackey, here with John Markfeld. On this week's Market Moment, we're going to be covering equities, stocks, and what does the Fed's latest comments do for them. We're going to be talking a little bit about Robinhood. Haven't talked about them very often or much lately. We're going to talk a little bit about Robinhood, and then we're going to close today's podcast with a little fast food talk. But before we go any further, want to remind all of our listeners and viewers to like, subscribe, do all of those positive things that get the podcast out to more and more people. So, John, how are you, my friend?
I'm doing great. Life is good.
There's just two of us today.
Yep. Power team is what we call it.
I don't know. Everybody else may have more important things to do than
I think we had the most time on our calendar. I think that's the deal.
Probably so. Have a good weekend?
It was great.
Yeah?
Rain. Not much going on, you know.
It's kind of that lull time in sports.
Yeah.
Hey, the shirt.
I know the horse race. We had the Kentucky Derby this
Kentucky
weekend.
Derby was this weekend. Pretty good race.
Yeah, I'm not a huge Derby fan. Didn't watch it.
I'm not either. I watch one race a year, and it's this one.
Yeah, but it was supposed to be a great race, though, by a nose.
And Arkansas ties.
Yeah, Arkansas
horse won it. That's awesome.
Is really cool. Yeah.
Yeah. Let's dive right in.
Sure.
Shall we?
You bet.
You know, we're missing a sidekick, so we're going to have to carry the missing
the whole
person.
load. Yeah.
Let's talk a little bit about stocks. Last week, pretty good week. What do you think?
Oh, I think it was a great week, and I see this little line here. Zoe does such a great job giving us bullet points,
yeah.
but and I'll just read this because I think this is important. Stock rose Monday as Wall Street looked to build on an end-of-week surge precipitated by a softer-than-expected jobs report that helped spur bets toward an earlier rate cut from the Federal Reserve. And you go back last week, the Fed came out and said basically they're not going to raise rates. And the market rallied off of that, which I find kind of
it is so
dicey,
funny. And I was thinking about that
Yeah.
over the weekend and a little bit yesterday. The market right now is so headline driven.
Yeah.
That last week was a very volatile week.
Right.
The Fed's comments sent the markets up and then collapsing.
Yeah.
Because rates are higher for longer, which I think we're of the opinion that they probably should be.
Right. If the Fed is going to do what they wanted to do from the get-go.
And then this week, they've completely turned about face.
And bad news kind of spurs the market on too. So this is kind of funny to me. The Fed says 2 years ago that they're going to raise rates until we get inflation down to 2%. And of course, we're not close to 2% and won't be for maybe ever again.
Yeah.
But, the Fed makes that strong statement that they're going to do whatever it takes, even if it pushes us into a recession. And then they kind of slow that roll down. They say this year, beginning of the year, they're going to lower rates 3 to 6 times was the beginning of the year. Now it's reduced to maybe 2 times this year. But the fact that they came out and said they're not going to raise rates, like a quarter ago it was they're going to lower rates 3 to 6 times. The market rallies because he says he's not going to raise rates this year, which kind of tells you where things have gone, right? A lot of people think that if the Fed followed through with what they said they were going to do 2 years ago, that they would be raising rates potentially. I'm glad they're not. I'm glad it's staying the status quo for a while. And to your point, the longer it stays this way, probably the better, so we can get things under control before they start lowering rates.
Last week the S&P gained 0.6%, Nasdaq gained 0.7%, the Dow rose 0.2%. Stocks rallied at the end of last week, getting a boost from a Goldilocks jobs report that struck the balance in providing welcome news for both the markets and the Fed. More than 2/3 of bets are now on a September rate cut from the Fed, according to the CME FedWatch tool. Most traders now expect at least 2 cuts by the end of the year. In corporate news, and we found this out this morning, Disney will take center stage this week as earnings season begins to wind down. Disney reported after the bell yesterday a slight miss, and the stock's getting crushed this morning, but I think it's overblown. If you look at their streaming services, streaming services are doing well. Everything that Bob Iger said he was going to do when he took back over the helm of Disney he's doing, they're becoming a streaming service.
Right.
You know, it'll be interesting to see kind of what they do with ESPN. You know, I think that ESPN is kind of the 800-pound gorilla
Right.
within Disney's family of networks.
Right.
You know, a lot of people feel like they're going to spin them off, but we'll see. But, you know, last week we got the Fed speak on Wednesday. The jobs report on Friday was very positive. And so you're right. I think that bad news in this case was good news. You know, I told somebody yesterday that if it weren't, the Fed is supposed to be non-political, right?
Right. Supposed to be.
Yeah, wink, wink.
Yeah.
I think if it wasn't for an election year, I don't think they lower it all.
You're probably right. And I also think that if you go back to the Fed's interactions since President Obama through Trump through now, we might not have been in this place had they done a little more work back then. And during Donald Trump's term, he pressured the Fed to not raise rates because, you know, a business person loves lower rates because
Sure.
it spurs on the economy, and every, you know, place that you can think of from research and development to housing to everything. So, of course, Trump pressured the Fed. Now, the Fed may not have taken that pressure from him. You know, it's not supposed to, right?
Right.
But there was pressure. And then now you've got pressure because it's election year. You
cut.
do not want to monkey with this market. You don't want to do something that's going to create a collapse, and then you're responsible. You're, you know, quote unquote, responsible for the incumbent president not getting reelected because an economic fall or crash could be the catalyst for a new president, regardless who's in the office when that happens.
You know,
that makes sense.
You know, you make a good point. You know, our clients, you know, everyone wants to make it political. You know, we get questions daily, weekly. Hey, what should we be doing with our money given the election in November?
Right.
You know, what happens if so-and-so is in the White House? What if so-and-so is in the White House? And, you know, it's kind of the burning question right now. You know, it really doesn't matter.
That's
That's the bottom
matters,
line.
yeah.
But I think that you made a point just a few minutes ago that, you know, I think that both administrations can be partly to blame.
Yeah. I think it goes back. I think it goes back longer than I think it goes back to the Obama years when we had rates low for so long and the market was recovering, and it had recovered basically his entire term, and we never did anything with rates. And then Trump comes in and he, you know, pressures them to stay low so that the economy can continue to spur on, which I totally understand from an economic side. Mm-hmm. But then again, it put the Fed in a pickle in the last couple of years. I will say this, you know, on the election stuff, and I think it's kind of interesting. Yes, our clients get really emotional about the election, and I understand that. Left, right, and, you know, it's the end of the world if one person gets in over the other, blah, blah, blah. But I'm a historian of the market going back, you know, 100 years, and basically things that we think are true aren't necessarily true. Like,
Sure.
For example, I don't think most people would think that a Democratic president being elected, the market has done better than when a Republican president has been, you know, in office.
But it has.
Right. And I don't think most people would think that.
Sure.
I don't believe that, like in 2008 when Obama was elected, I had a very good friend, very good client that took everything out and bought gold bars against my advice. But gold has done well. But the point is, he bought gold because he was afraid that the world was going to end, right?
Sure.
And then when Trump was elected, I have a very good client out in California that was so afraid of Trump that they took everything out against my advice, right? And of course, we know during both terms, the market soared, and so they missed out. And so if you get emotional about the politics, you know, that can hurt you in an investing.
Sure.
But going back to the Fed and the way the market is running right now, I have a sneaky feeling it doesn't matter who wins the election. It doesn't matter what type of policies that, you know, go forward after the election from either party. The market might have, if we've got some manipulation here, right? If the Fed is a little bit political here, which we're not sure they are or not, right? But let's say they are. When the election's over, there's no reason to be that way anymore, correct? And so then I think you could see maybe them doing the right things all the time for a short amount of time, and that could create a little sell-off in the market, if that makes sense. But, you know, we don't know that either.
And it will be, September. I think that's the month that people
There-
are beginning to kind of bake in.
Yeah.
There's quite a few months between here and there.
Oh, yeah.
Things are still, we've talked about this on almost every podcast, but inflation is here.
Yeah.
It is entrenched. We're going to talk about it a little bit in our last segment, talking about fast food,
Yes.
but it's here. And, yes, it's come down from its 9+% a couple years ago.
Right.
But
It's still way above the target.
absolutely. We'll move on here in just a minute, but, we repriced our insurance, auto and
Right.
home insurance over the past couple weeks. Man.
Oh, yeah. We did the same thing. It's stupid.
It's expensive.
terrible.
It's expensive.
And I don't know how young people do it now, and it's harder and harder and harder. We do need inflation to get in check, and we need some things getting in check.
Yeah.
Because it continues to get worse.
One thing that I like to see, and John, I think you'll agree with me, but, last year, this time last year, the markets were so skewed towards the Magnificent Seven.
Right.
The NASDAQ
The whole
by
year,
this time
yep.
was up,
Yep.
double digits,
Right.
and the Dow was negative or
Right.
up low single digits. Year to date, S&P 500 is up 8%. This is as of Friday.
Right.
S&P for the year is up 8. Dow is up 3.25. NASDAQ is up 7.9. The Russell 2000 is barely flat. I mean, it's up 1%.
Right.
Foreign stocks are up 5. Emerging markets are up a little less than 5. What we have been telling our clients and what we're beginning to see is this broadening out of the market. It's healthy. We knew it would happen. We just didn't know when. I think most investors going into 23 had no idea that the Magnificent Seven would do what they had done. I mean, AI.
Oh, right.
AI was new.
If we knew all of us that's all we'd own,
Sure,
right? Everybody
sure.
be doing great.
Let's shift gears.
Okay.
Again, but before we shift gears, again, a reminder that if you like the Market Moment podcast, we encourage you to give us a thumbs up, a like, subscribe, tell a friend, tell a family member. We like what we're doing here. We don't take ourselves too seriously, but we like to provide, general information that we feel like our clients, just people in the community, can learn a little bit more each week after they've listened or heard us or watched our podcast. Topic number 2, Robinhood said the SEC could pursue enforcement action over its crypto operations. The SEC could soon pursue enforcement action against Robinhood, according to the trading firm. Robinhood disclosed in a filing on Monday that over the weekend, the regulator sent it a warning letter that upon the completion of an investigation, the company could be charged. After years of good faith attempts to work with the SEC for regulatory clarity, including our well-known attempt to come in and register, we are disappointed that the agency, referring to the SEC, has decided to issue a Wells notice related to our U.S. crypto business, according to Robinhood's chief legal compliance and corporate affairs officer. We firmly believe that the assets listed on our platform are not securities, and we look forward to engaging with the SEC to make clear just how weak any case against Robinhood crypto would be on both the facts and the law. How many years ago was it? 2 years? 3 years? Yeah. Where, when Bitcoin primarily, but other cryptocurrencies just exploded onto the scene. And the only place, maybe not the only place, but the primary place that you could buy these currencies was on.
Yeah, if you didn't go to the
Robinhood.
exchange, I guess, to get the Bitcoin, which I've never bought Bitcoin. I have clients that have Bitcoin. I have no desire to, I missed out, but I have no desire to go do that because
they are unregulated
Right,
securities.
right.
So therefore, firms like ours, your big firms, your Morgan Stanleys, Merrill Lynch's,
can't offer them.
Can't offer them.
Yeah.
You can buy an ETF.
You can buy ETFs like loosely.
Correct, but you cannot buy.
Now there's better ETFs, I guess.
Yeah, but now you cannot buy, Ethereum,
Right,
Bitcoin
right.
from us or any of the major SEC firms because they are unregulated.
Right.
Therefore, people would go to Robinhood, which was an online trading platform. And what Robinhood is saying, the SEC's rules did not necessarily apply to them.
Yeah, and I don't disagree with that.
Because they were unregulated.
Right,
So,
and I saw a question from Zoe, and I thought this was great. How do either of you feel about apps like Robinhood that allow normal people, to invest in, stuff like that easily? Are there dangers or risk, or is this a great tool?
Yeah.
And I have my opinion on that. I'm curious on yours, but I think it's great when young people can get involved and get into this. Of course, there are risks, but that is up to the person that, and I watch young people, and my kids are in college and so on. There are risks to vaping, but half of them do it. I mean, my kids don't, thank God. But I'm saying, like, yeah, that's how you learn in life. It's like sometimes you might take risks that hurt you, but you learn from that. I'm not saying that, everything should just be open, but there's a great movie that's out right now on Netflix, and I'm looking at Zoe. I know I'm not supposed to. What's the name of it, Zoe? What's the name of that movie? Dumb Money. Yes, it is fantastic, but it shows how, like, you can be a young person, you can go get these things against the big status quo wirehouse, the big firm, the big guys, and I kind of find it interesting they did that through buying like cheap stocks like GameStop and so on, and everybody made all this money, and then the regulators got upset that people were making dumb money, and so they kind of tried to stop it. So I'm on the side of the little guy on this pretty much, and I'm not afraid of Robinhood. I want every person to come see us because we can guide them correctly. We're in the industry, but I think it's cool to have those tools.
I would agree with you. I mean, we live in America. Okay?
America.
I mean,
Yep.
It's free enterprise, and
Right.
People can kind of do what they want. What is the I don't know what the Latin phrase is for buyer beware, but
Right.
buyer beware. And so I think Robinhood has a place. I think they serve a purpose. I think it's great when, and we always talk about young investors, but I think it's great when investors with a small amount of money can buy into the market.
Yeah.
It's a great educational tool. One thing that was unique, and this is more of an educational piece for our listeners and our viewers. If you come to our firm, if you wanted to buy, or any firm, Amazon stock,
Right.
Buy me 10 shares, buy me 100 shares.
Yeah.
You could go to a Robinhood type online trading platform, and you could buy half of a share.
Right. Which is cool.
Amazon at one point was trading at,
Over
$1,000.
Yeah.
If you're 16 years old or 18
Right.
and you've got $500,
Right.
you can't afford one share of Amazon
Right.
stock. So you could literally buy half a share.
Yeah.
And so it filled a void. I don't even know if we knew it was a void until something filled it. But I mean, sure. Now, with that, with the good comes the ability to do things like crypto, and there's a reason why it's unregulated. Okay,
Right.
there is a very valid reason why most investment firms do not trade
Right.
in this currency. So,
Yeah,
I think at some point they will be regulated?
Yep.
Yes, but until then, it's the wild, wild west.
It's the Wild West.
And so you're going to see investments. You're going to see what you saw a few years ago with GameStop and some of these other thinly traded. And I mean, it was literally a situation where young, inexperienced investors were moving
The market.
Yep. And I've been in this business 30 years.
Yeah.
You've almost that much. We tell our clients that a client comes in with $300,000 or $400,000, and let's say we put it all in Apple stock. You're not moving that stock.
No doubt. Yeah.
I mean, because
Yeah.
billions and hundreds of millions of shares are being traded. But literally, you had a period of time where the average, as Zoe put in our notes, the normal investor moved the market. And
which is pretty amazing. The other thing, on the two sides of that risk, Lee, Bitcoin, there are so many young Bitcoin millionaires out there that bought it way back when, and they are millionaires now at $63,000 a coin. And then on the flip side of that, there's another phenomenon besides GameStop. There's the marijuana trade. Yeah. And the marijuana trade was a hot topic how many years ago? And then it's just slowly, the federal government has not, taken the law is still there that prohibits marijuana, right? Sure. So banks cannot lend to these marijuana distributing companies. Sure. So it's kind of, those stocks have gone to zero basically. So people that invested in that took a risk, lost everything. People that went Bitcoin, same time frame, became millionaires with, no clue about what they're necessarily doing, just taking a chance on something. But there's an idea of that one thing that didn't work and one thing that did. GameStop was an anomaly, those kind of stuff, because they kind of the meme stocks, they called them.
Sure.
But it's also part of this conversation. But Robinhood has kind of let people in on those things. I actually think it's kind of cool.
I think it's cool, and
yeah.
I think it has been a great way for smaller investors
to have a piece of the pie.
To have a piece of the pie.
Yeah,
Absolutely.
I totally agree. Totally agree.
All right, moving on to our final topic. Fast food sure got expensive. The CPI, the Consumer Price Index, which tracks and measures inflation, labels fast food restaurants as limited service meals categorically. In the latest report, the limited service meals prices have gone up nearly 30% from 2019 to 23. Full service meals, however, the typical sit-down restaurants with servers, only increased by 24%, and overall inflation was 19% for the same time period. This means that fast food's price increase is higher than both sit-down restaurants and the inflation rate altogether. A huge factor in this price increase is the minimum wage increase, and additionally, the need to increase wages to entice employees, since very few people are signing up to work at these establishments. Fast food's expensive.
Yeah, and this is so stupid simple. Okay, when you force McDonald's to pay employees $20 an hour, they have to raise their prices. It is not. They can't make it on a $4 cheeseburger anymore.
Susan and I were out in California.
Yeah.
A couple months ago.
Yeah.
And we tried to avoid fast food.
Right.
Altogether.
In general, yeah.
Yeah. Other than Chick-fil-A.
Yeah.
But we were, I don't know what we were doing, but we were hungry.
Yeah.
Maybe had a late breakfast. We didn't want to eat a lunch, but we swung into McDonald's to get a Diet Coke. And while we're like, we'll have some fries.
Yeah.
A large fry at the McDonald's in, Malibu.
Yeah.
Was $6.
That's amazing.
It was not on the dollar value meal.
It's amazing.
But I mean,
it's crazy.
And so I talked to the person there, and their wage, their starting wage is $22 an hour.
Yeah.
California has a law that now says that fast food workers' minimum wage is $20. And you're right. You cannot absorb that type of expense as a company.
Yeah, and you think about restaurants, nice restaurants, a lot of the wait staff, they have less salary, but they have tips that are very good, right? So they can make it through life. And so it skews that. That's why I think the numbers are skewed, that their prices hasn't gone up as much as the fast food. The fast food is stuck with this labor issue. And it's kind of a, I don't know, bite your face off to spite your nose, whatever that saying is. We're trying to lift up people that have, that work at McDonald's. We're trying to lift them up, but in turn, we're hurting the very people that we're trying to help, and then we're causing more inflation problems because everything goes up when that happens. This is just, it's kind of like duh, and that's why I said it's kind of simple, stupid. Look, here's my thought on the minimum wage stuff. There's this fight to make minimum wage so high, so much higher, and all this stuff. Minimum wage is meant for high school kids, young college, kids are in college, to give them just a wage while they're going through school, while they're working. It is not meant to be for a 40-year-old who has a family. When you're at that stage, you're supposed to have moved up. Like if you work for McDonald's and you never leave McDonald's and you start at 18, when you're 40, you're making far above minimum wage, because you're now a manager or a general manager or whatever you are. It is not, so they make it out like this is all these people in America would be affected by this, but it's actually they've messed it up, in my opinion, big time. And it cost all of us more. That's my rant.
How do you feel about wages?
That's my little rant.
At what point now? Earnings season, we're about to wrap up earnings season.
Right.
Overall, earnings have been good.
Right.
Continued. The consumer's
still spending.
It's still spending.
Yeah.
Earnings across the board have come in better than expected.
Future cast a little bit bleaker, but earnings have so far been good.
Fast food restaurants.
Yeah. Oh yeah. McDonald's got crushed.
Are hurting.
Yeah.
So the question is, in this segment, At what point does a person say, I can't do McDonald's?
Right.
I mean, you take and I would say Chick-fil-A is an exception.
Right,
Okay.
right.
Because I don't know if there is a price point to where people will just say, I'm not going to pay $7 for
Chick-fil-A
a piece of chicken and 2 pickles.
Right,
You know, I don't know. But I mean,
I'm going to keep paying it. But anyway.
you go to McDonald's now
Yeah.
with, a family of 4.
I know.
It's,
It can be $40, $50, $60.
yes, it can.
Yeah, exactly.
It can. And so,
It used to be $20, literally.
I mean, you could
It's
go to the
3
dollar
times as
meal
much.
and get a quarter pounder, fries, and a drink, and spend $3-4.
I know.
And so, do you see a time? Is there a point where the American consumer just says, "I've had enough"?
Yeah. I can see that happening, and I can also see companies like McDonald's and so on. There, innovation is always upon us, and I can see employees being eliminated. There is a McDonald's in Texas that has no employees.
Yeah.
And I think that's going to become
It's in the Dallas area.
Yeah,
Yes.
it's going to start becoming maybe the thing they do to not have that labor cost.
Mm-hmm.
But what does that do to the society? That takes away jobs from high school kids, from college kids, where those jobs are usually given. And that's going to affect the economy, right? But I mean, back to your point on when is American people going to stop, I would say sooner than later.
Well,
I mean,
you're already seeing it in McDonald's.
right.
10 years ago, you'd go into a McDonald's and there would be 4 or 5 checker registers.
Yep.
Now there might be 1 or 2.
1 or 2.
And they have those kiosks
The self-kiosk.
where
yep.
they want you to order yourself.
Which I hate those things. But yeah, I agree.
And so they're trying to
Yep.
they're trying to fight that, I think.
Yeah, I think
And
so.
So it will be interesting to see, will fast food ever be cheap again? I don't know.
Hey, think about $20 an hour times 2,080, which is a full-time employee.
Yeah.
It's $40,000, over $40,000. Just think about when we got out of college, our first job. I think
think minimum wage when I got out of college, I think was like $3.25.
Yeah, I think it's
mean,
about $5 or $4 something when I got out.
Yeah.
And I got out in 1993 or 4, maybe been $5 an hour by then.
But
yeah, it's now we're talking 20.
Yeah, for some industries and some states, so it's expensive.
It's expensive.
Anyway, good ramblings today.
Yeah.
We got to enjoy the Markfeld rant. Well, anything else on your mind this week?
I have one dad joke. I mean, can I say it? I mean, can I do the dad joke?
Anything else we want to cover before then?
Oh no, I don't have anything. Do you have anything?
I don't know.
No, I'm good.
You're good?
I'm good. Yeah.
Do you think we missed Matt and Eli?
No, I mean okay, sure. Some people might like them more than us, Lee, but I have very few.
Yeah.
I mean, the percentage has to be very low.
Yeah, I don't know about that, but
don't comment on that, please. Don't tell us.
We do, before you do the dad joke.
Yeah.
Hey, we do appreciate comments to our various platforms. So if you've got a question about today's podcast or a podcast that you've listened to in the past, please go online and write that down. Send us your comment. Keep it, G-rated possibly. We'll try to answer it on air. But we do appreciate you listening. We do appreciate your viewing. And again, if you have the opportunity, subscribe, tell somebody about our podcast. We're looking to continue to grow the market moment. You want to wrap us up with
I'll wrap us
dad
up
joke?
Yes.
Do
Why
it.
don't skeletons fight each other?
Why?
They don't have the guts.
Dun.
Da-da-da. Da-da-da. Yeah, dun-dun-dun, whatever.
Well, see,
we'll get better. We'll get better at that.
We can do dad jokes since Matt's not on here.
Well, right. He avoids them like.
The cat's away, the mice will play.
That's right. That's right.
Or as you would say, the cut off your face, to spite your nose.
Something like that.
You
There's
butchered
something.
that. Yeah, we're not even going to go there. Anyway, everyone, thank you.
I might reverse that.
That's right. Thank you for being a part of our Market Moment podcast this week. Until next time, everyone have a great week.